Global debt is at dangerously high levels. In early 2022, it hit a record high of 305 trillion, equal to around 350% of global GDP. That's an astronomical figure even in today's economy. The World Bank and the IMF have warned us that this may cause a lot of problems, including slower growth, constraining government policies, and also the increased risk of a financial crisis. So, why is this happening? Well, our governments have been increasingly reliant on debt to keep the economy on track, especially during times of crises. This is why today, we have seen our gigantic debt obligations rise rapidly over the past 50 years, along with multiple recessions and ever-increasing government spending. Japan, which debt is 240% of its GDP, began spiraling out of control when the stock market and the real estate bubble burst in the 1990s, and the 2008 financial crisis and the COVID pandemic made the problem even worse. Meanwhile, China is facing a different problem, as businesses, local governments, and ordinary people alike rake in tons of debt to fuel the real estate bubble, which culminated in the fall of Evergrande, the largest Chinese property development company, which at one time was the most indebted property developer in the world. Now, for most countries, debt levels were already very high even before the pandemic. But during the pandemic, it became much worse. The US, for example, had its debt rose by 5 trillion in 2020, rising from 23 trillion to 28 trillion. And right now, in 2022, it has risen even more, exceeding 30 trillion for the first time in history. So, now what? How is it that excessive debt can hurt an economy? And is this a problem that we should worry about? Let's find out right away. Okay. So the global economy has experienced 4 waves of debt accumulations over the past 50 years. The first 3 ended in a financial crisis, and believe it or not, we are in the middle of the 4th one right now. These periods are from 1970 to 1989, ending in the Latin American debt crisis and the early 1990s recession in the US. From 1990 to 2001, ending with the Asian financial crisis, and from 2002 to 2008, ending with the global financial crisis. Each of these debt accumulation periods differs in scale, size, and the countries that are impacted, but it all ends in the same way: a financial crisis and a subsequent increase in unemployment around the world. And it also starts in the same way. It began during prolonged periods of very low interest rates and was often facilitated by changes in financial markets that encourage rapid borrowing. Now, I don't mean that debt is inherently bad or that debt accumulation will always lead to a financial crisis. Countries that use debt correctly do get a lot of benefits, like increasing growth, stabilizing economic conditions, like the stimulus given during a crisis, and it can provide a safe asset for investors to invest in. After all, government debts like the US Treasury bills are some of the safest asset classes in the world. Of course, this is assuming you don't live in countries like Argentina or Turkey. But even so, the high debt build-up that we've seen since 2010 is very concerning, because we have seen the largest, fastest, and most broad-based increase in debt in the past 50 years. This is true in almost all countries, but especially true in developing countries. The average annual increase of debt in developing economies since 2010 is almost 7% of GDP. Higher than the previous 3 periods. And while those 3 periods of debt crisis were mostly regional, meaning that not all regions experienced debt build-ups, the 4th wave that we are facing right now is global. It happens all across the world in developed, developing, and underdeveloped countries alike. And to make matters worse, the debt build-ups that we're facing right now include both the government and the private sector, unlike the 3 periods before that were only dominated by one of these 2 sectors. All of this sounds very concerning, and based on the description that I've just said, it seems like the world is ripe to face a debt crisis. But before we jump to conclusions, we should try to understand how excessive debt can hurt an economy, a question that sounds simple but many of us do not understand. The first point to understand is that debt is not much of a problem if a country's real debt servicing capacity rises even faster than the debt itself. If debt increases along with the supply and demand of goods and services, then the debt is effectively self-liquidating. That doesn't mean it wouldn't impact the economy though. Some sectors may benefit more than others, and certain individuals may gain more than others. But this is a problem of income distribution, not debt. The real problem comes when debt rises faster than the country's debt servicing capacity. This often happens when the debt is used towards something like defense spending or unproductive infrastructure projects, like China for example. Usually, when this happens, the economy will bear the cost of debt through higher taxes that may reduce investment, trade deficits that may increase unemployment, or higher inflation that may raise uncertainty in an economy. A related but far more serious problem of excessive debt is its indirect costs. As debt balloons and uncertainties arose on how the cost of debt will be allocated in the economy, people and businesses alike will take steps to protect themselves. Wealthy people might move their assets into foreign currency. Consumers may cut back on spending, home buyers may delay purchases, businesses may become risk-averse and hold their investments, factories may postpone production. Well, you get the point. These behaviors will spread quickly and reinforce similar behaviors on others, making an entire economy crumble like a house of cards. These will in turn halt the economic activity, making the debt payments even harder to manage. Policymakers may be forced to make hard decisions to alleviate the short-term damage, even when these policies aren't the best long-term wise, potentially creating more problems in the future. This is exactly what is happening in China's property sector right now. Until last year, Chinese people and businesses either didn't really notice that the property sector was in a huge bubble, or they knew but still went along with the ride, as they believed that this problem would be resolved by the government. Even after years of persuasion, warnings, and outright restrictions from the Chinese government, homebuyers still speculate most of their savings on apartments. Property developers took on astronomical levels of debt, and financial institutions were more than willing to lend them money. But after the Evergrande saga took place and the government was reluctant to bail them out, everyone began realizing about what happened and took steps to protect themselves. Home buyers lost their appetite for property as they saw how 1.5 million Chinese citizens got burned by Evergrande when they didn't receive the homes that they spent their life savings on. And other property developers that still survive began panicking as their lenders withheld credit and began asking for immediate payment. As this is happening, construction projects are halted or completely abandoned, causing millions to lose their jobs, which in turn causes the local governments to lose some of its revenue and begin to cut back on spending. As you can see, this example illustrates just how interconnected the economy and its agents are, and how uncertainties can spread through an economy. A problem that begins with the over-leveraged property sector can damage other sectors that initially had nothing to do with the property sector. Now, that sounds awful, but we are not done yet. Another problem that may arise with excessive debt is external shocks. The future is uncertain, and anything from a global pandemic, rising commodity prices, rising interest rates to foreign currency risks poses a huge threat for a country with lots of debt, which increases a country's vulnerability to a financial crisis. At the time of recording, there is one country that's already the victim of this. Sri Lanka is right now in the middle of an economic crisis, the worst one since its independence in 1948. Heavy borrowing and the decline of its tourism industry due to COVID caused its foreign reserve to dry up. As of February 2022, its foreign reserves are at 2.3 billion, and it has foreign debt obligations of around 7 billion, including 1 billion worth of sovereign bonds which is to be repaid by July. Moreover, rising food and fuel prices due to the invasion of Ukraine exacerbated the problem, and caused food and electricity shortages throughout the country, with inflation at 33% in April. The World Bank said that almost 60% of the lowest income countries were in debt distress or at high risk of it before the invasion of Ukraine. And rising interest rates from the Fed only compounded the problem, as these countries had a lot of foreign debt. So, this is a problem for a lot of other countries as well, not just Sri Lanka. So, now what? We have seen that debt is a major problem in most countries, and coupled with the economic downturn and rising inflation that is happening right now, times seem more uncertain than ever. And it kinda is. So, that's why we should be careful, take care of our own finances, and hope for the best. Another problem in our economy that is worth sharing is rising inflation. Unfortunately, I have made a video on that and discussed its similarities and differences to the 1970s inflation in the US. This is Doverhill, and see you next time.